hope the edification of the people who are watching tonight. You said just a few moments ago that the President of the United States asked for more regulatory authority over Freddie and Fannie. Is that correct?
That's correct. That was 2003, New York Times, September 11th. The President sees this coming. He says we've got to regulate them more. And people are saying, I'm reclaiming my time, people are saying this is a failure of free enterprise. This has nothing to do with a failure of free enterprise. This is a failure of socialism is what this is.
Well, that's what I wanted to clarify, if you don't mind yielding it back a second. But the thing is, the President of the United States, President Bush, who I've not always been in agreement with on many things, but he was asking to regulate these GSEs, government-sponsored enterprises, Freddie Mac and Fannie Mae, and it was actually the Freddie and Fannie, along with the Community Reinvestment Act, that created, plus the low interest rates, if I remember correctly, that were out there so that these subprime loans could be made. Isn't this what created our housing bubble that just rose so quickly and then burst so rapidly that the housing prices went down?
Well, Congress,
and the Republicans were trying to, and I think, if I remember correctly, there were Republicans in the House also that were trying to, in fact, we passed a bill. Is that not correct?
That's correct. We did pass the bill. Reclaiming my time, we did pass the bill, and this is something that we saw as a problem. But as you recall, the way that the Senate body works, while we sent it over, we sent legislation to them, the Democrats, this article goes on to say the Democrats opposed it, and we didn't have the 60 votes to get it passed, so nothing was done. And that's perhaps, if there's any blame that needs to be made on the economy being in the condition it's in, it really rests with the U.S. Congress, with the House and the Senate. Now, it's these other rating agencies that said that you're going to give a AAA rating to this trash. Certainly, they ought to have to be accountable as well. And certainly, Wall Street was knowing that they were selling trash and rating it AAA and just selling that all over the world. It wasn't that they hadn't done some things wrong, but to allow that to happen, first of all, the Congress was out to lunch.
But it was not.
I yield, gentlemen.
Well, thank you, sir. It was not the free enterprise system. It was not deregulation. It was not anything except for the Democrats here in Congress that blocked the regulation. And it was actually, there were programs that were established by Congress. If I remember correctly, the Carter administration passed the Community Reinvestment Act initially.
That's correct.
And then under the Clinton administration, it was markedly expanded to force banks to make these loans where people couldn't pay. Is that not correct?
Gentlemen, reclaiming my time, my understanding was what Clinton did was not so much in the community reinvestment, although that was done with Acorn and all, but more particularly that Freddie and Fannie, he specifically required that they make loans that essentially we knew weren't going to be any good. I yield.
Well, I appreciate that. So the Community Reinvestment Act, and then that's where I was going, and I appreciate you mentioning that. Acorn became a bunch of thugs using extortion. It's what I hear from my bankers at home in Georgia, that the Acorn folks would come in and threaten them because they couldn't expand their services. They couldn't put in ATM machines unless they would make these bad loans. And that's what created this whole financial debacle. And the blame, though, what I'm getting at is the blame lies right at the feet of the people who are pushing this stimulus package, saying it was free enterprise.
Well, reclaiming my time, gentlemen, I think that you've struck something that strikes me as being a tremendous irony. The people who created the problem now are charged with fixing it, and that leaves us in kind of an interesting, and I think that, you know, the reason that I wanted to take a little bit of time with you gentlemen and knowing that you know the subject, the reason I want to take time on it is because sometimes people want to say, oh, we don't want to go witch hunting or going looking at who we're going to blame. But on the other hand, if we don't understand how we got into the problem, we'll end up doing the same dumb thing over again. And that's my concern.
Absolutely. If the gentleman will yield.
I do yield.
I'm a physician, as the gentleman knows, and in medical practice, we look at problems, and we try to find solutions to those problems. In fact, it's quite different from what lawyers do. Lawyers generally just argue problems. We try to fix problems. We try to find solutions to those problems. And so we look at all the symptoms. We look at the causative factors that come to bear in any disease entity. Now, we've got a horrible disease problem of a poor economy that the American people are hurting terribly. And we're right now in the debate of about a bill that the House passed last week. The Senate's taking it up now. But there's, in my opinion, a tremendous amount of blindness by our colleagues, particularly on the other side, about what are the causation factors of the housing burst that's really created this economic problem that we have in this nation. And I commend the gentleman for bringing this up, because that statement that the New York Times put in place, I think, is very indicative of what's going on now. And I heard the same people who are arguing back in 2003 and earlier against regulating Fannie and Freddie, those same people, when we were talking about the TARP funds, the Wall Street bailout, kept making a case that we need to make more of these loans in the name of affordable housing. Well, make those loans to people who cannot afford to pay them.
Reclaiming my time, gentlemen, somehow or other, people want to try and package this as compassionate. I'm trying to think of people such as myself or other people in my district. And what happens if you put someone into a house, and maybe they can afford a $250,000 house, and you put them in a $400,000 house, and all of a sudden, every month they've got that mortgage payment coming due, and the financial pressure that starts to drive the husband and wife apart and make the children's lives hell, as eventually they end up on a street side with their sofa on the sidewalk because they can't afford. How is that compassionate? I don't understand. But gentlemen, I note that we have some other distinguished guests here. Could we come back to you in just a minute?
Well, I'm going to have to leave in a second. If you don't mind,
I will
like
yield.
to tell you a story in the American public, a story, if you'll yield just another minute or two.
I yield.
Okay, thank you. I've got a friend who's in the timberland business. He buys and sells timberland. And he was telling me a story during this whole period of time when real estate prices were going up. He had a piece of property in my district on the market for $1.3 million. Gentleman came in and said, "I want to buy your land." My buddy said, "Fine, here's a contract." The buyer signed it, went to closing. My good friend, when he got to closing, of course, got his check for the $1.3 million. But he found out, because of the problems with the banking industry making these subprime, low documentation, no documentation loans, that the buyer actually borrowed $1.7 million for a $1.3 million piece of property. So he put $400,000 cash money in his pocket. Now, if the property went up to $2 million or 2.1 or $2 million, then the bank would be happy. Both the buyer or the seller in this deal would have been happy, and everybody would have been fine. But my friend found out that the buyer had no job, he had no assets, he had no way to pay for this loan for $1.7 million.
So reclaiming my time, gentlemen, you're just giving an example of this absolutely crazy runaway policy that we had. It's basically a free money. You don't have any job, don't have any money, borrow whatever you want and speculate and hope things work out right.
Well, that's the point I was trying to make. If the gentleman would yield. That's exactly the point I'm trying to make, is that this whole banking industry debacle was crazy. And it was set up by policy that Congress established. And Republicans tried to do something about it, because we, as a Republican Party, people here in the House, members of the Banking Committee and the Senate Financial Services over here on the House side, realized that this was a disaster in the making, and they tried to do something about it. And every effort that we did was blocked by the Democrats, who right now today want to force down the throat of the American people this stimulus bill, that in reality is nothing but a steamroller of socialism that's being shoved down the throat of the American public, and it's going to strangle to death the American economy as well as the American people. And
you're reclaiming my time, gentlemen. We are going to get to that very point that you're making, and I thank you so much, Congressman Broun from Georgia, and I sometimes think of it as doctor, but now you're congressman. You got a couple of different hats. I appreciate your just straightforward approach. This is what we're talking about. It's hurting a whole lot of very small, very average people, and the thing that really makes me sick about it is we saw the thing coming, and not only has the American economy got a cold, we've given pneumonia to the rest of the world, and there are people starving because of these very policies. And somehow putting somebody in a house that they can't afford, I don't see how there's anything compassionate about that. But we are joined by another doctor from the great state of Georgia as well, Dr. Gingrey.